Thanks for joining me. We're here at the middle of the year in 2023. Common question is, after a relatively good first half of the year in the stock market, what might be the back half of the year? Let me try to paint that in a pretty simple way. If you've paid attention to my writings and my videos over the course of the last year, I pound the table pretty hard on this thing that I've called a midterm miracle, which is said simply that the 9 months starting October 1st of a midterm election year, those 3 calendar quarters, the one that ends here in the middle of 2023, those 9 months are the most consistently profitable period in the stock market and in all stock market history. The effect of absolute or relative gridlock introduced into Congress slows down political risk aversion because pretty much things get absolute or relative gridlock and people don't become afraid that some kind of legislation might blow back on them. People hate losses more than they love relative size gains. And as that slowly settles in on people, the market loses a fair amount of risk aversion and stocks rise. That's been working picture perfect since October 1st, parallel to that strong first half of 2023 in the stock market. The reality can be extended in this way. The back half of the year after a midterm miracle is also not as consistently profitable, but much more profitable than the normal stock market in consistency. Normally, stocks rise, depending on whether you think about U.S. or global, 65-70% of the time. In the midterm miracle period, they rise historically 92% of history, 92% of all those periods. In the back half of the third year of a president's term, they're normally positive about 85% of history, with slightly lower average quarterly returns than in the midterm miracle. In the midterm miracle, you're getting average returns of about 6.5%, a little bit better this cycle, but only a little bit, almost picture perfect. And then in the back half of the year following that, you're typically getting 4 to 5% return. Will that happen this time? Well, you don't really get the average except for by luck, but it's probably a profitable time. It's probably a good time. Let me make this point. We haven't had a negative third year of a president's term since 1939 in the S&P 500, and that was only down 0.9% as America was facing the beginnings of World War II. The fact is, this is a pretty good time. It's a good time partly because people still remain skeptical. I've written and talked about the pessimism, disbelief, and people keep coming up with yeah buts to try to justify why this can't really be a bull market. And it is a bull market. It's acted like a bull market. It's acted like a new bull market in ways that a lot of people don't understand. Not all bull markets start off the same way. This one has intuitively been big cap and growth led because we're in a period where people don't really believe in the economy growing. It's a low growth economy with a lot of people skeptical about growth. So therefore, things that are dependent on the economy aren't doing well. Things that can grow in a relatively stagnant economy are doing better, and the higher quality they are, so it's more assured that you get that growth, the better still they do, and that tends to concentrate and has concentrated, and I believe will through the balance of the year, on the high quality megatech growth, on the high quality large luxury goods producers. I'm not talking about big expensive things like luxury cars so much, although that might apply a little. I'm talking mostly about physically smaller, high-end big brand luxury consumer items. And that world, which is mostly led out of Europe, not America, America's got a little, has been very strong also. So that world is what's leading. I think that world continues because we still have so much doubt in our culture about the economy. Are we going to go into a recession? Are we not going to go into a recession? What about this? What about that? What about the other? Yeah, but. And the result of that is that really high quality growth stocks, what's called narrow breadth, few big names leading the market, continue to do so. Thank you very much for listening to me.
Subscribe to the Fisher Investment YouTube channel if you like what you've seen. Click the bell to be notified as soon as we publish new videos.